Today is Monday, February 29th. Happy Leap Day. I'm going to take a look at the XLP, the Consumer Staples ETF. And this is just a technical setup that is definitely interesting. We have a breakout from a triangle pattern, and then Friday saw a reversal, pretty big reversal, an outside day reversal. And now the ETF is trading back inside the triangle. So did it fail, or is this just a pause? Can't be too precise with these measurements. As you can see, I have actually ignored the low here last August and a couple of lows here last month. I'm going to show you why I did that right now. Put that into line format, and you can see that's where the daily closes are. So I'm ignoring these spiky lows. So this way I get a better idea what is really going on in the stock, rather than getting caught up in all the wiggles and details. So what do we have here? We have an ascending triangle, which could be bullish. It leans a little bit more bullish than bearish. We have a stock that is trading above both of its major moving averages, the 50-day in red, the 200-day in green or teal, whatever that is. So that's a positive sign. It's a little further away from the averages than it's been before, as it tried to break out last week. All right, some of the indicators below: on balance volume showing money is leaving the stock. More money is changing hands on days when it goes down than when it goes up, so that's a negative. Stochastics is high, which could be positive, but it is a trading range, it is a pattern. So we have a high stochastics that's crossed over. It hasn't yet moved below the 80 line down here. Some people use a 70 or a 75. The point is that it goes way overbought and then comes down. It's the coming down that's your signal, not just the overbought, because stochastics in a trend stays pinned at overbought, and that's a good thing. But right now this is just something to watch. It's not a warning just yet. Underneath that, Chaikin money flow, I actually started looking at that last week. It's kind of a weighted stochastics, weighted by volume. Anyway, it's showing a positive trend. It's still above the zero line, so that's a good thing. So it's not all bad here for this stock. Let's get rid of some of these indicators just to look at price. Okay, now we can zoom in on price. Take a look as we come back in. You can see that the bar on Friday was a key outside day reversal. It jumped up to a new high and closed below the previous day's low. Key outside day reversal. So that's pretty bearish. However, there's always a lot of howevers in this kind of stuff. It dipped down below the former triangle top. It's back below that, but not by much. This is an acceptable violation of a breakout. So not dead yet, and you can see that even in today's trading, it's still early morning. In today's trading, it's moving a little bit to the upside. So I wouldn't count this thing out yet. Have a big warning there. How would I know that this thing has been invalidated? The reversal has been invalidated, and I will just draw a little segment there. And it's usually about right in the middle of that bar. And why do I say the middle of the bar? Again, we'll switch graph types in candles. You can see that's really in the middle of the real body of the big red candle. So if it gets above that, that's a pretty good signal that the breakdown or the failure has been invalidated. So a failure of a failure. Obviously a new high would be the best signal, but I would say that it's still in good shape if it can get back above that 5150, and that's what I'll be looking for.